Aloha, my name is Valerie Rubio, and this is my project, Embezzlement in the Liquor Industry, Southern Glazer's Wine and Spirits versus the Employees. First, I would like to provide an understanding of the liquor distribution business as well as my role in the industry. Businesses that obtain a liquor license to sell or serve must purchase liquor, wine, beer from a licensed distributor. Licensed distributors are permitted to sell to businesses who are legally authorized to sell or serve to the public only. These companies do not sell to the public otherwise. This ensures appropriate taxation rules associated to handling these heavily regulated products. These businesses have numerous sales representatives that are held responsible for the sale of these items and maintaining ethical practices honoring state and government liquor laws. I have worked for a liquor distributor in sales management for 5 years and have seen firsthand how competing employees from other companies and employees of my own abuse their authority position for their own advantage. My following research will provide an example how the nation's largest wine and spirits distributor was fined for the actions of their employees against them. The embezzlement case I have chosen involves Southern Glacier's Wine and Spirits Distribution versus the district manager and sales rep, State of New York. This happened in Albany, New York, in which they were fined, as well as Pittsburgh, Pennsylvania. They were also fined. There's pending investigations in other places across the nation, including Oakland, California. This happened in January 2015 through January of 2017. In this case, employees were using credit cards to illegally expense company dollars to bribe customers to purchase product and for personal desires, eating, drinking, partying, items purchased for personal use as well. They were processing false orders under customer accounts and stealing product for own use or to resell to third parties for cash. Customers would also return purchases, and employees would falsely return products as damaged goods and keep the product to resell to third parties for cash. Commission pay was granted to the employees for fake sales, causing loss for the company for paying employees for sales that really were not made. Product samples were being charged to the company for employees' self-use to consume or sell. How did employees conceal their unethical behavior and steal from the company? First off, management support. Sales reps were using credit cards to expense receipts to the company and were being authorized by their superiors in the same sales department, allowing these expenses to go unnoticed and not questioned. Also, processing false orders. Sales reps were processing orders and signing invoices to accept order as the buyer. The invoices and statements were being paid by the customer for product they really did not order or receive, and they went unnoticed. False purchase returns. Without a second approval, the sales reps were signing off their own product returns as damaged goods and keeping product to sell for cash or to consume. Lastly, stealing product labeled as samples. Without manager investigation, sales reps were having the company fund samples that were supposed to be used to aid in sales and taste customers so they can purchase. Instead, they were being resold for cash. I would like to begin to explain how the internal control principles were violated in this case. First off, with establishment of responsibility and segregation of duties. Sales reps are inputting orders, accepting product orders, processing returns, and collecting payment. They should have only been allowed to be responsible for processing orders to complete the initial sale and nothing else. There was no way to track wrongdoing with more than one employee carrying out multiple duties. Sales reps were allowed to process their own expenses, and their own managers of the same department were approving. An employee from the accounting department who was not directly affected by the sale should have been the one approving these transactions. Documentation procedures. The company needs to have a better procedure for processing product returns. These documents should include signatures of the employee to identify who is responsible for the particular transaction. These should be processed to relate to the original transaction to confirm timely recording by the accounting department and to avoid error. Also, expenses should be processed via appropriate paperwork to provide enough information to verify cost and have appropriate approvals and signatures. The next internal control principle would be the physical controls that were violated in this case. Warehouse product security. Liquor product for sale should be locked and in a secure area. This would have limited who had access to the company assets. Sales reps will not be able to touch product they are not authorized to possess. Also, as far as product samples that are to be used for work purposes only should be in a locked, secured area to keep track of who authorizes use and ensures that they're being used appropriately. The fifth internal control principle that was violated would be independent internal verification. This is an example of how the internal control principle violation could have been avoided if the company would have adhered to better verification policy. In the middle, we have the accountant with the sales rep and the sales rep around him. Step one would have been the sales rep charging the expense. They would charge the expense and submit receipt for initial approval from the direct manager for the appropriate reasons. The sales manager would then accept the receipt from the sales rep and proper documentation and submit to the accountant for further approval. The accountant would review submission from the sales manager, and they would ensure compliance with company policy and then submit for payment after all of this was approved. The sixth internal control principle violated would be human resource control. The sales management was condoning the sales representative's behavior. This could have been avoided if the approval process involved multiple managers rotating, taking responsibility of this. Also, requiring tasks to be taken over when employees go on vacation, so a superior could discover the theft at an earlier point. This would have saved the company millions of dollars and a hefty lawsuit, not to mention the customers the theft affected as well. Overall, the company could have prevented the theft and protected their assets by following procedure. Adhering to the internal control principles consistently could have avoided the hefty lawsuits that resulted in fines of millions of dollars to Southern Wine and Spirits and thousands of dollars the company lost in sales and in product. The company had enough employees to carry out these procedures. They just were not following them. The handling of cash and payment. The overall handling of cash, payments, and inventory led to the source of the problem in this case. Over time, it seemed to be that employees became comfortable with the lax supervision of these procedures. Accountability. Employees being accountable for their actions and responsibilities should be encouraged and reinforced. The culture can set a positive foundation to discourage poor behavior and unlawful business practices. In this case, the overall company can afford the changes that need to be made by executing better training to employees. This is a national company with individual home bases in each state across the country. I'd like to conclude my presentation with noting that Southern Wine and Spirits was fined $3.5 million in the state of New York due to various lawsuits from customers that brought the fraudulent behavior of the employees to light. This number does not include the thousands of dollars of product and expenses the company lost or that were stolen. To this day, other lawsuits and investigations have come to light in other states. I have personally encountered the poor practices in this industry and have seen how it has affected the company as a whole. Luckily, in my company, we have followed procedures appropriately to lessen the amount of loss. I chose this case to research because I feel my employment has given me a better understanding and relevance to the subject of internal control principles. Here are some citations that I used in my research. Thank you so much for listening. Aloha.